Hello, folks. Welcome to Market Trends. This is David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone. Today is Thursday, July 24th, 2025. I'm going to share a few um, links in the disclosure. It's great to be with everyone as usual. Don't forget to go to tradestation.com. And if you scroll down the homepage, you're going to see a blog post that includes some of the information we're going to cover in this session. Now, also, don't forget that TradeStation is preparing to launch Titan X, the next generation of our trading platform. It isn't just a new model of our award-winning software, but a fresh trading paradigm that puts you in the cockpit like never before. Titan X will be available to customers as a beta soon. If you're new to TradeStation, you can join the waitlist at tradestation.com dash Titan X, or see the link in the description of this video. Great. So if you're on tradestation.com, scroll down the page and you'll see here volatility fades as AI boom widens. This is our rundown for today's webinar. If you want to check that out, and here are the standardized returns of some ETFs that we may be talking about in today's webinar. So, we remain in the kind of low volatility environment that we've talked about for a while. Last week, we had emphasized a tight kind of sideways movement. Actually, let me just, I'm going to open one more workspace here. Let me just find it. Sorry. So basically, just some of the charts I'm going to pull up here. I had just a few of the charts that I wanted to show for today, and it's this one. All right. So basically, last week we started with the tight kind of consolidation pattern, how the market was holding 6201, and basically that has continued to play out. Tight sideways movement without a lot of selling pressure. So two charts today I want to show. First is this chart, which is the same one that appears in our blog, and this essentially shows the so you can see this is a level we held. This is the SPY, but on the S&P it was 6201, and this was when there's a report of Powell maybe getting fired, and then it didn't happen. But what's interesting here is that we basically see new highs in the S&P 500 yesterday. We see the advanced decline line continuing to inch higher. So today we have a little bit of weakness in things like small caps and things like that, which are kind of hurting the advanced decline line a little. But I think the key thing is that all of this here is very consistent with a very kind of broad upward movement. And I think that's one of the things we want to focus on. Now, before I move forward, I want to do something else very quickly. Now, remember, it is earnings season, so let's just get some of our tools going here with our workspace. Now, remember, at the top of the blog, there is a link to some tools that we share with you guys. If you load those workspaces, if you load the indicators and everything else, then you get the workspace. You will actually get this workspace here. It's called MT Main July 2025. If we go over here to earnings dates, this is basically a calendar that will allow you to look at the companies as they come up. We're going to go to data, add symbol list, S&P 500. Take a few minutes to load. So now we're going to go ahead and we will come back to it. So wanted to just kind of say also, what's also interesting is, remember in this webinar, on Mondays, we do state of the market, and on Thursdays, we do market trends. State of the market is a focus on the indexes and things like that. Now, for the last week or so, we have been talking about some of the potential opportunity in housing stocks, and they had a pretty violent rally on Tuesday with DR Horton and Pulte both reporting some strong numbers. So I think it kind of just shows again that you need to kind of it can be useful to kind of think about the worst case scenarios being priced in and everything else, and making sure to watch both of the webinars because we do cover a lot of kind of important things. And I think also one of the things here is we're starting to see the beginnings of a sort of quasi rotation into stocks that could benefit from rate cuts. We're seeing the utilities, the real estate investment trust. We're seeing the housing stocks. I think it's kind of interesting, as we focus on the second half of the year to kind of think about the year in different phases. The first half of the year was a lot of kind of craziness and incredible macro uncertainty and volatility. And now we're getting to another part of the year in many ways when things could be kind of the opposite. It could be kind of return to normal trade and everything like that. So let's look over here on this chart again. And the housing market, again, is one of these things that will come back. Well, not necessarily will come back, but it has that potential to return to kind of normal as people move away from that kind of a maximum fear. Now, this is the one I just showed you. The other chart I want to show you, the S&P 500 here, is a chart we've shown you in various forms for some time now. This is one of our favorite kind of setups. I mean, it has some other markings on it. I'm gonna just focus really on what matters. What I'm interested in here is the RSI. Now we call this RSI cooking. In my view, RSI is really good as an overbought, oversold indicator on the hourly chart. It can be very useful for that. On the daily chart, however, it's often a trend signal. So if you actually look, the RSI, well, I don't have it going back that much history on this, but let me just go and I'll go back to 3 years of history on this chart. With the RSI, basically when it goes overbought, and go here to settings, I'm going to go to 3 years back, go back and see some of the important periods. But when it goes overbought, it can often kind of stay overbought and stay bullish for some time after. So if you look at the market overall here, if you look back in late 23, it went overbought, and then there was really very little pullback here. And this was a breakout to new all-time high here, all-time highs. It was actually right around here was the actual breakout. But the key thing is that once RSI gets overbought, it can do what I call it can be like cooking when it just kind of goes up. It's like a pot on a stove kind of boiling. It doesn't like change. It just kind of sits there, and you're going to get RSI sometimes consistently like in the high 60s, around between kind of 60 and 75, and it can just stay there for weeks and weeks as the market inches higher and keeps moving higher. And that is kind of what we're seeing here. We're also seeing what I think is a very useful indicator, which is a 9-day rate of change. And you can see here that when you're in these kind of bullish advances, you'll see this really doesn't go negative for a whole period of time. It may go a little bit negative, but the key thing is in any trailing period of time, if a person was to buy, they would be positive, 2 weeks later, 9 to 12 days later, or something like that. And so I think the key thing here is that this is the kind of hallmark of the tight pullbacks, the tight sideways movement. It goes tight, it stays tight, it finds support, 2 to 3 weeks back, not 2 to 3 months back. And so this is kind of consistent with the tight lack of sellers, tight, market with, very limited volatility. And so this is really, I think, the key thing I want to mention. This continues to kind of show that we are in that kind of market environment. The RSI, these things are consistent with a market that has a potential for a steady uptrend. So those are the main things I want to show you in this index. All right, now, let's take a look back over here, rundown. I'm going to zip down to the bottom really quick because we do have, I want to point out that, we have our Monday webinar, and the link to it is up there. We do State of the Market on the 28th, but just don't forget that Wednesday of next week is actually a really big day. The real part of earnings season, we had decent numbers from Google, not so decent numbers from Tesla. But then the real kind of thick of earnings season kind of gets going here. And Apple is actually on the 31st. I didn't put it on there because we'll do our webinar. I only have the pre-market on Thursday, 31st. But Wednesday, the 30th, is when things get interesting because we have a GDP report in the morning, the Fed meeting in the afternoon, and then after the close, we have Meta and Microsoft. So just realize those kind of things are out there as big issues. This afternoon, we have Intel and Deckers. Deckers might have some color on tariffs. We'll see. I think it's at this point in time, the tariffs are one of these things that are just known, and it's not massively clear to me how to kind of to think about it at this moment. So we also had an announcement on Japan today or earlier this week. All of those things I think are also just kind of at this point in time, they get to a point when they are just kind of increasingly in the rearview mirror. And I think that's just important to realize. Some of the other things is on this chart to quickly just mention was the fact that the advanced decline line has been making new highs. And also it's interesting, as you can see, that it was making new 52-week highs, also consistent with that pattern. And the VIX now kind of, actually closed it yesterday at a new low under where it was in February. So I think at one point now, at this point here, it's one of these things just to realize is that this is not necessarily a market will make significant moves to the upside, but it can be steady sort of things, and individual sort of areas can give potential opportunity. And we're going to get to some of those. All right. So what's interesting to me here is we continue to see the overall AI boom just kind of widening out. And what's interesting is Baker Hughes. Now, this is a company that no one really pays much attention to, that I've really, it's a former part of, I think it used to be for a while part of General Electric, BKR. This was very interesting to me to look at Baker Hughes, because Baker Hughes is an oil and gas servicing company. And yesterday they announced earnings that basically said that there was strong demand for their natural gas services, something probably installing different kinds of natural gas stuff, installing pipelines and all this sort of stuff when you're building natural gas turbines and power plants. There's obviously a lot of capital work that has to be done, and that was what drove their quarter. And why? Because of AI. So I mean, of all the stocks that I never would have guessed are going to be AI. I mean, how many people really would have thought, if I ask you, you know, a month ago, is Baker Hughes an AI stock? They would have said that's really a stretch. Well, it was, and it was a massive move on this. And I think a lot of people were seeing this sort of thing as a surprise. It surprised a lot of people, and that's why you see a move of this size. So that was Baker Hughes. GE, what is it? GE Vernova. It's like, GE broke off and the windmills and things like that, but they also had, AI sort of news as well. Now, if you look at the utility stocks, we talked about this. This was our article on Monday, and we had been talking about the XLU sneaking toward a kind of potential breakout. And it happened last week when there was a deal in the space, and now there's kind of there was more information yesterday when this something called PJM. It's some kind of like grid operator. I mean, honestly, these are the things most people don't think about very much, like the inner workings of the utility industry. But what's interesting is this is some kind of company or some kind of entity that prices, electricity for the grid, and they do some kind of auction. And apparently the auction was a very significant price increase also because of AI. So again, you can look at this yesterday. There were some articles on it, I think on Reuters and stuff. So, but this was very interesting, and it lifted some energy stocks. Is why we had that big move in XLU. So that's just kind of interesting. TE Connectivity Solutions. Remember, you guys may or may not remember, there used to be a company called Tyco that had that broke up, and here we go. Also, they're like Amphenol. They make a bunch of connectors and different things for data centers and for electricity and different things like that. Again, the data center boom just continues. Another company is NEE. This is a utility company. Now they got smashed down, and I'm not really sure about all the intricacies of this company. They also have a lot of green energy stuff. So with all these companies, there is a potential that there are some complications of potential write-downs and things because of some of the changes in the tax law. But I think what's important on this is they also did report a strong number because of data center demand. So I mean, the thing with all these this wasn't necessarily just like the idea of this stock per se as being something that necessarily is attractive. The idea is just that all of them keep highlighting data center demand for electricity in this case. Now, PEGA, this is a software company. They talked about AI also boosting their earnings and revenue. And then, of course, we had Google or Alphabet, and they had a lot of different pieces in their earnings report. But the thing that did stand out was they increased their CapEx spending plans from $75 billion to $85 billion. Another one that did pop up today I thought was kind of interesting was, I mean, Bloom Energy. I've never really understood this company. They make some kind of fuel cells, but they also now had this strong report. Look at the weekly chart of this. What I did on this chart, and the next time I share with you guys, I think actually this is July. I think the last one I gave you guys was May. MT Main, my workspace. I update it every few months. I put this in blue so you can see the difference. I don't know how you feel about the color on it, but I like to just have sometimes my weekly and my daily different colors so I don't get confused. But anyway, this is Bloom Energy, BE. This is a company with a lot of different, it's had all kinds of strange history and stuff and products. You might want to look into it, but I think the key thing is the data center demand continues. This narrative just keeps spreading. Late last year, it wasn't even late last year. It was, you can see in this part of, I mean, it was actually probably in April through May of last year. These utility stocks in this period right here, this was basically April through May of last year. this was when the utility stocks came to life because of data centers. So now we just continue to see this trend widening. We had talked about this level of 84, or no, 83 was the level we were watching on the XLU, as for confirmation of the breakout. And you can see last week we closed above that, and now we're extending. So I know that utility stocks are not massively like interesting or popular, but it is telling us something. So I think this is just something that is worth kind of being aware that we continue to get confirmation about the data center thing sort of being a driver across industrials, energy, utilities, obviously technology. So it just continues just to be a real drumbeat in the background. And I think when we think about that also, it also kind of tells us that the consumer is not really in the driver's seat right now. This is an enterprise capex driven economy, at least for the time being. And that trend just continues. So I think that is also where kind of attention needs to be focused. Um, so if you look at today's economic data, it was just kind of more of nothing hugely interesting. Jobless claims are better than expected. Also, it's interesting is the European Central Bank basically kind of gave some hints that they might be kind of near the end of cutting rates, and of course, the Fed is maybe potentially at some point inching toward a rate cut, although it's not really that clear. And here we have the 10-year Treasury yield. I want to just point out, to me, this is a very inconclusive chart, and I think we're in this interesting sort of range. And this, I think, I'm not going to say anything about it very definitive now, but I think we have to just realize that it's there. And if this does start to make a significant move in either direction, if it does break out to the upside and really see continuation, that can be a problem for stocks. But if it also breaks to the downside and moves lower, that could be a significant tailwind for stocks, and especially for things like small caps and housing. And I think when you look at some of the things we're starting to see develop in utility stocks and in real estate investment trusts and in housing, I get the sense that we're in the early stages of the market preparing for long rates to move lower. And that's just kind of, I think, an interesting thing to kind of bear in mind. Now, another thing that was interesting today, we talked about AI, is, and we've talked about this, and I think it's something that we have to start thinking about, is the wireless towers. There's three wireless tower stocks: AMT, CCI, and SBAC. Now, these companies, I've checked, they don't seem to be talking about AI, but there has to be a point when you wonder, with people using AI and all that other stuff, and also these stocks have really been struggling for, a long time here. You have to kind of wonder, do we get to a spot here where CCI, AMT, and SBAC, start to come to life? So CCI had a strong earnings report, strong volumes for their data, however, for putting transmitters on their towers, and however their business exactly works, but they obviously benefit from increased use of wireless data. Like Verizon and all the cell phone companies, they use the towers of these three companies. Whenever you actually drive around, you see like wireless, the towers somewhere or something like that. They own these three companies own most of those locations around the United States, and overseas in some cases as well. So anyway, they're in an area that seems like there is the potential for secular growth. There is limited real estate, like there's not a lot of places you're going to be able to add. So then in some cases they have a very clear sort of corner on the market in a lot of geographies. And I think it's just interesting to realize that these stocks have really been struggling ever since the Fed started cutting rates back here in 22. And so I think we want to just kind of bear this in mind and realize that CCI, with the strong earnings, they had an upgrade today, I think by Raymond James. But the thing is that this could be the beginning of something that could be a lasting trend that we might want to kind of be paying attention to. That is the wireless tower stocks I want to mention. We also continue to see strength in the financials that we've talked about many times. And I think today Blackstone kind of added to that. We had talked about how the financials, the XLF here, essentially had consolidated on the weekly here. We did this on State of the Market, but the thing is, we had identified a price zone around here, and you can see how nicely it held that 52, kind of 52.15 price area right there. It held that very tightly. across here, and now it's extending higher. So financials to me are in a spot where also people, they're going to be looking for something, and I think is interesting to actually think about if consumer stocks kind of hit the wall, you know, financials might be the replacement for them. So let's just that is a possibility here in terms of like the leading sector. We before we talked about the big three, we talked about tech, communications, and consumer discretionaries, which had Tesla and Amazon. But now maybe that's less of a major name, a major theme. But instead, we have financials stepping in, and to a certain extent, industrials, as we've talked about, stepping in. Although today, talking about industrials, we did have the airlines are in one of the industrial areas, and honestly, pretty weak earnings here from um, American Airlines and LUV. So again, these are also kind of consumer discretionaries in a way, tackling industrials, but they're having some demand of travel, kind of doing well, but it hasn't been hugely confirmed. So I do want to kind of point that out. It's not a very clear area here. So I think the thing that is that we do continue to have that kind of data center AI thing, financials. Those things seem to have some clarity. A lot of the consumer related stuff does not. So speaking of financials, let's take a look here at Goldman Sachs. I'm also going to fire up Option Station Pro, and people might want to look at Goldman because it's interesting to see Goldman, consolidating above kind of this 690, 700 kind of price range. And if you look at this price movement here above, 690, this could be a kind of, decent consolidation here that's been going for, almost a month. So a stock like this sometimes is a kind of relatively clear breakout. People might want to be thinking about a calendar spread. So calendar spreads, if I can, sorry, my options chain is coming up. Bring it over. All right. So calendar spread. Oh, let me just get Goldman up there. Should be what I was looking at in this name was the 750 strike. So a person could look at the month of October. I'm going to hide myself here. So if we look here at the month of October, a person, for example, could look out something like the 750s, and those calls are going for around $24, $25, and someone could potentially buy those, and then the idea would be potentially to look to August and sell the same options for around $6, the same calls for around $6. So by doing that, it would lower the net cost. We'll just show you. Go here to 750s. You're going to click on the ask. It will then populate a buy order down here. Now remember, this is for educational purposes only. I'm just kind of showing some of the ways people may use complex option strategies. And you can see it now. What I did was I held on the control button and I clicked on the bid on this on the short term. Wait a second, I'm looking at the wrong one. I wanted to actually do. Let me kill this. The one I was interested in actually was the 8th of August. I have the wrong expiration open. Going here to this one, I'm going to hold down control and click on the bid. All right, so a trade like this would cost, per contract about $20. And the idea would be, if you look here at the theta, which is right here, these contracts lose 33 cents per day, and that theta will increase as time moves on. Now we look down here at the ones that would be potentially bought, and they have theta of 23. So right there, what you're seeing is that one loses 23 cents a day, the other loses 33 cents a day. So by owning the longer dated ones that lose less time per day, there will be, that is something where the ones that you sell will lose value more quickly than the ones you own. So that is part of what the philosophy of a calendar spread is. The other thing is that these options here with 15 days out, they are at the beginning of the fastest decay. So this theta on these will likely become a larger absolute number each day going through expiration, unless Goldman suddenly like jumps to like 800 or something. But under normal kind of circumstances here, a name like this, what will happen is if you look at say the 750s also, just for educational here, let's look at the 750s um, of next week of August 1st. If we look at these 750s, let me actually just get more strikes. These 750s have theta of 37. So you can see the closer you get to expiration, that means 37 cents per day. So the thing is the closer you get to expiration, see a week from now, all else being equal, the 750s that are now going for about $2, these 750s of the 15th of August, they're now going for about $4. If Goldman stays where it is and volatility, there's no dramatic changes in market conditions, those same calls for next week will be worth $2. So they'll lose $2 in that week of time. As you can just kind of, this is a rough comparison. The idea is buy the longer dated calls, sell the shorter dated calls, and then the shorter dated ones lose value. If the trade works correctly, it goes to zero. But then where you are in the middle of August when these expire, the ones you sold, the ones that get sold expire. I'm sorry, not in the middle of August, the 8th of August, then another 2 weeks into the future, sell them again. So then people could jump out to the 21st of August or whatever that Friday would be, and you just keep jumping forward in time. And each time that happens, the options you sell lose value more quickly than the ones you own. If Goldman sneaks higher, then what happens over time is the options. I mean, if it does, kind of trend higher, the options that you own, what can happen is you can then look to sell calls above. So maybe, for example, you can roll a position like this for 2, 3, 4 weeks and work down your cost basis in the calls that you own at the 750. Say then Goldman goes up to like 740, then a person could start selling the same calls like the Octobers above and turn it into a vertical spread. Because if a person was long this, say Goldman goes up closer to something like 740, 750, a person then could go and sell like the 60s against it and turn it into a straight vertical spread. So a calendar spread like this, when a stock has a clear breakout, is the sort of strategy that people might want to be, from time to time thinking about when they use options. So I wanted to just kind of point that one out as a potential thing. Another thing I'm trying to figure out, but I do think we have to just at least realize here is that this environment is decreasingly favorable for gold. Here's gold futures here, and I mean it's just been drifting here, but the range is getting tighter. If you look at this, you can actually, I mean, I'm not gonna over think it, but I just want to say here that there is a lot of crowded money in gold. And with the ECB cutting less and maybe the Fed not needing to cut and not as much craziness happening and stocks hitting new highs, it's just something to think about here. I think there's a lot of crowded, positioning in gold. If you look at the GDX is like the gold miner ETF is just kind of forming this range. And it's not like something someone would say is being bearish outright overall, but you can kind of see, look at the Keltner channel, look at this high kind of stuck between 50 and 55. And so, from my view here, I think we just have to realize is I, I'm just kind of entertaining the possibility here that there could be a period here where there is some of a sort of a move away from gold. I think that the kind of fundamental argument in favor of it is somewhat diminishing as a lot of the drama that we've seen sort of fades. All right, let's just see some of the other things on this in this rundown we wanted to briefly talk about. Um, there were some signs of the equal weighted kind of non-big cap, big tech performing well. I'm not sure if how much that's going to absolutely continue, but I want to just kind of point out that this is a market that does have a lot of breadth, and there's the attention on the big technology stocks, but other areas of the market have been showing some strength, especially utilities and REITs. I mean, these are an area that people absolutely have not been paying attention to, and I think that it's very interesting to see what happened with utilities last year and to see the potential for that continuing. Also, as just kind of interesting here, I thought I don't have time to really get to as many of these, but it was interesting, I think, to see that we're seeing more meme stocks today. American Eagle also had some meme-like activity, and it was also interesting to see that the overall HVAC trend, we saw the LII, the Lennox, but that remains an overall theme. Actually, there were one or two other stocks I wanted to briefly show you before we end. Now, Las Vegas Sands, even though American leisure maybe is not as great in travel. It's not as clear. This has a Chinese exposure and it had strong earnings here. So this is a name here I think is kind of interesting. Oops, what did I do? Let's just go over here and look at it on the weekly chart. This is a name on the weekly here that you know people might just look for this to move back up. I mean, this is a stock that has really gone nowhere for a long time, and names like this, um, they have that potential to sometimes surprise you to the upside because they have been just kind of dead, and there's not a lot of long money really trapped in it long term. And I think when you look at a name like this, um, look at the you can see here that there is, I mean, this trend line around like this. I don't know why. You know what? See, this my computer now is not behaving. I'm going to get a new one in August. Second half of August, we're not going to be doing this webinar, and I'm going to get a new computer because it has been really misbehaving. Anyway, you can see that this trend line's in the wrong place, and I apologize for that. I think the key thing you can see here is that this is stock that has basically gone nowhere for a long time, and we now have the potential of some Chinese news, which is, you know, expectation of Chinese stimulus and everything else. Another one I want to mention, Lam Research. LRCX. Now we had the strength in chip stocks overall, and I think it's really interesting here to look at LRCX kind of pulling back and holding this level here, right around kind of 95. So Lam Research reports earnings here at the end of the month. So this is one I think was kind of interesting to take a look at, LRCX. And Netflix, and Netflix here is pulling back pretty sharply. People really taking profits on it. But there can be some support down here, I think, in Netflix as we get kind of closer to this price range. Well, I'm going to give up on this. My computer is really being bad. Anyway, if you look here around kind of around 1150 down toward 1100. So I think this is a really significant pullback in a name like this following what was not a terrible earnings report. Again, buy the rumor, sell the news, and that's what they did in this one. And a name like this could be something that drifts here for a period of a few weeks, and that can be some opportunities for people to sell put spreads, credit spreads underneath it. And I think that's actually kind of here where people might be interested in with a name like Netflix. It's not an AI name per se. It's had a really good run, so it's not really where the buzz is right now. But at the same time, there's nothing about it that is like truly bearish or anything. It's just that they've taken profits on it. So those are some of the names that kind of jumped out to me that I wanted to mention. Hope everyone has a great weekend. We will be back on Monday for State of the Market. We'll see you then.